All right, welcome everybody to this retirement transition information session number 6 for the VRS Hazardous Duty Plans 1 and 2. So we are here today because, as you may know, on September 25th, City Council adopted the resolution to transition to VRS on January 1st, 2024. So a little bit about the transition before we get started. Existing employees are going to have 1 year from December until December 31st, 2024 to make a decision either to stay in the Richmond retirement system or transition to VRS. And this decision is permanent. It is also your individual choice. We encourage all employees to look at their own individual circumstances, weigh the options, and speak with both retirement systems before making their decision. So today's session is to provide you with information from VRS counselors to assist you with that decision. And we also have representatives from RRS here to answer questions as well. I'm going to provide some information about some key aspects of the transition that it's important to keep in mind. So just to get an idea, I imagine some of you have attended some of the prior information sessions that we held before the resolution was adopted. If so, some of these points that I'm about to talk about may be repetition for you, but in the event that you may have forgotten or it's a refresher, just wanted to reiterate a few things. So if you choose to transition to VRS, your contributions to RRS will cease once you begin VRS. So your RRS account is going to remain as is in RRS and will continue to accrue the interest and earnings over time. You just won't be contributing to it, and the city will not be contributing to it any longer. And if you are not vested in either the DB or the DC plan, you will still have the option to vest if you reach 5 years with the city. That RRS account is just going to stay as is until you reach the 5 years. And there's another caveat to that for non-vested defined benefit plan members, but I will go into that with you if that's the case in a separate discussion. So RS service as well is not eligible to be ported or transferred. Ported meaning transferred or purchased in VRS. RS service was not able to be transferred because there are many, many options and different plans in RS, and it's just not, VRS said it's not able to be transferred over that way. So if you have other types of service, however, such as military time or federal service, that may be eligible for purchase under VRS's normal purchase rules, and VRS will be going over that today. And then finally, beginning the first pay period in 2024, so the pay period starting December 30th, employees will contribute a 5% minimum to retirement, whether you have decided to transition to VRS or stay in RRS. That minimum 5% is a contribution change for RRS. Now, to do this, a salary adjustment will be made to cover the increase in your employee contributions and to mitigate the FICA tax impact. So if you'd like more information about that, we do have a pamphlet. I believe it may be linked to in the chat. Yes, it is. So there's a link there in the chat that says, please view the VRS transition brief handout at this link. So on page 11 of that handout is more information about the contribution adjustment if you would like to learn more. And then to affirm your decision to stay in RRS or transition to VRS, we're going to have employees complete an election form. And we're in the process of finalizing that form, and it should be available very soon. So stay tuned. We will notify employees when it's available to complete and instructions for submitting that and making that election. So contact information is going to be provided at the end of the session. I will now go ahead and hand it over to our VRS counselor on the line, Herman Jones. And I also just want to point out that Kia Johnson, I believe, is on the call, Deputy Director for the Richmond Retirement System. So hi, Kia. and they will be able to assist with Q&A at the end. So please save your questions until the end. We have some ground rules for taking your questions at that time. And in the meantime, Herman, you're welcome to go ahead with the hazardous duty presentation. Thank you.
Okay. Thank you so much. I hope everybody can hear me at this point. Switched over.
Yes, we can hear you.
Yes, sir.
Thanks.
Great. Okay. And hopefully you can see my screen at this point as well. So, of course, again, my name's Herman Jones. I'm with the Virginia Retirement System. And today we just want to kind of give you a bit of an overview of the retirement program and just kind of give you a general idea of how this Plan 1, Plan 2 process works. And basically, it's about members that are covered under the Enhanced Hazardous Duty Benefit Program. There's a little bit of a different type of benefit for those that are hazardous duty. So want to make sure we step through that process and give you a good feel for how VRS will work with you to provide the enhanced benefits and what we consider to be a political subdivision, which is the city of Richmond, with the enhanced benefits. So there are some additional positives to that in putting together the program for you. Now, when it comes to your benefits, kind of before we start, we want to talk about benefits available to you. And so we want to make sure that you know which positions are eligible. Of course, any full-time salaried sworn VRS covered sheriff, deputy sheriff, and jail superintendents, any sworn officers and regional are eligible for this program. Firefighters, emergency medical technicians, of course, are part of that hazardous duty component, and they will be covered under this program as well. So now that we kind of understand that, who's eligible within that retirement system, we just want to kind of review with you the eligibility, based on a political subdivision, which is what we consider the city of Richmond to be. And we want to look at your retirement options and some additional benefits that are available to you. And then finally, we'll kind of talk about what happens if some of the things don't go just as we plan for our retirement. Now, first, it's important we want to get started and start to tell you what we're looking at in terms of retirement eligibility based on these plans. Now, if you're in a hazardous duty position, you do have these defined benefit options, which are Plan 1 and Plan 2. Okay, they are defined benefit. That means that pays you a lifetime benefit or a lifetime pension, if you want to call it that. So it's based on a formula. So first of all, you want to kind of understand, when can I start to take that and what's my eligibility requirements under these programs. Now, for those members that are covered with a hazardous duty benefit, of course, the opportunity to retire earlier, than basic members in the VRS retirement plan. And in order to do so, these members must be vested. And to be vested to the benefit under the Virginia retirement system, you must have at least 5 years of service credit. Either, in your case, in a hazardous duty position, that's covered under the enhanced benefits. And, some of the other programs that we also administer, of course, is the State Police Officers Retirement System and, of course, the Valor System, which is an additional hazardous duty component that we administer. But all this falls up under the hazardous duty or enhanced benefits programs. So the question comes for a lot of folks is, of course, when can I retire? I know in some cases you may receive, in the hazardous duty position, you may receive either one or two options you have. First option being, of course, to kind of take an unreduced retirement. And this is planning for your retirement, of course. So in order to get an unreduced retirement, this is going to still pay you a lifetime benefit. You have to be at least age 50 and have 25 years of service. Okay. So that gives you an unreduced retirement. And when we talk about unreduced, very similar to um, Social Security, if you take it early, then you're going to have a little bit of a calculation that will reduce the benefit, but it still pays you a lifetime income or a lifetime benefit. The other option for those of you who reach age 60 and you've got that 5 years of vesting, you also would be eligible for an unreduced retirement. Okay. And this is under the provisions for your plan, unreduced retirement. Now, you also have the opportunity to take what we call a reduced retirement. Okay. That reduced retirement, it would mean that you would be age 50 and have 25 years of service at that point. Okay. Yeah, and that would give you a reduced retirement, but you don't have that 25 years. I mean, it's fewer than 25, I'm sorry, but you could be age 50 and have that 5 years of vesting. Okay. That's kind of the magical number in terms of your vesting that you would need to have in order to get a full or get an unreduced retirement benefit. Okay. Now, the question comes, okay, so how, if this is a formula that we use, how is that formula calculated? Okay, how do I receive my benefit and what's the amount? And of course, the way that we look at your benefit when we go to calculate it is we want to look at the average final compensation. Now, for those of you that may be under what we call a plan one, of course, we're going to look at the 36 highest consecutive months of your salary. Okay. And we're looking at salary only. Okay. When we look at that average final compensation, no bonuses, no additional overtime, but just looking at your salary. And we use a high multiplier of 1.85, and we multiply that by the total number of years of service that you have. Okay. So that's if you fall under the provisions of Plan 1. Okay. So when it comes to those of you that may fall under the provisions of Plan 2, we're going to look at the 5 highest years or average 60 months of consecutive service and use that as your average final compensation in the calculation. Again, if you fall under the provisions of Plan 1, then those folks that were in that eligibility criteria, of course, you're going to have your 36 months of consecutive service that we're going to use to calculate. And if you fall under the provisions of Plan 2, of course, we're going to look at the highest 60 consecutive months of your creditable compensation, okay, to determine your retirement benefit. Now, when it comes to hazardous duty supplements, there is a supplement that's payable to those of you in addition to your pension, but you must have at least 20 years of certified hazardous duty service in order to receive that, to qualify for that. And once that is certified, we of course would like to have a certification form that's put into your file that shows that you have that 20 years of service, certified hazardous duty service. And you could obtain that once you reach your 20 years of service from your human resource department. And then, of course, at least it's a good idea to have it on file as soon as you reach that 20 years, so that when you do decide to retire, it's already in your profile, and we'll hold that and process it for you. It is an additional amount that's paid on top of your pension. Currently, it sits at $1,407 per month. Okay, $16,884 a year. So that basically gets added to your pension, and it's paid to you up until your normal Social Security retirement age. Okay, wherever that falls, somewhere. Of course, these days it's a little bit of a moving target, but anywhere between 65 and 67, of course, it's going to pay you that 1407. That is a taxable amount. That 1407 is taxable, and it's paid to you and only you. And if something happens to you, that component of the benefit does stop, and that's the hazardous duty supplement. Now, we look at that hazardous duty supplement every 2 years, okay, and we review it. And of course, since I've been there, I mean, it's gone from $900, a little over $900 up to the $1,407 that it is currently. Okay. So when we review it, kind of look at the cost of living adjustments and things of that nature, and it may increase that benefit for you. Here's a chart that really kind of reviews just for your FY, for those of you looking at the length of the payment based on from Social Security's website. This is kind of based on your year of birth. This does show you kind of where that hazardous duty supplement would pay up to based on when you were born. And as I said earlier, it's usually up to age 67 for most of us these days until they decide to change that number. Now, under hazardous duty, there is a mandatory retirement age. That mandatory retirement age is age 70, of course. And remember, if you're covered under hazardous duty, you must either retire or you may be reassigned to a non-hazardous duty position and continue to accumulate service time at that point. But once you reach age 70, you have to either be reassigned or you must retire to continue reporting under that. Okay. Now, when it comes time to decide, you got a big decision to make at this point. When it comes time to decide to retire, one of the things that you're going to have to decide on is my payout option. How do I want to receive my benefit? And a couple of different ways here that we want to share with you as to what your decisions would entail. And there's 4 of them, and this one here is the basic benefit. Okay, which is what we'll share with you. The basic benefit is a payout option that you can choose, and that basically will pay you and only you. It pays the highest payout option available to you. And if something happens to you, that benefit does stop. Okay. Now, you make contributions. You're making a 5% contribution to your member contribution account. What that basically means is that you're going to still have possibly funds that are still left in your what we call member contribution account. If something happens to you and those funds are still there and you're receiving the basic benefit, then those funds get paid to your beneficiary. Okay. So this is where you want to make sure that you designated a primary and hopefully a contingent beneficiary to receive these funds when it comes to, as a planning tool in order to make sure that those funds that are in your account do go to who you designate. Okay. The other option that you have as a payout option for your benefit, and this is for your defined benefit pension, is to use a survivor option. Okay. Survivor option basically means that you're going to leave anywhere or designate someone to receive either 10% or up to 100% of your benefit that's going to go to that survivor. Okay. So you are saying that basically you choose a percentage. There's an opportunity to, on what we call the main My VRS website, to kind of calculate, use our benefit estimator and see what impact that has on your benefit, because it does, because we have to pay a lifetime benefit at the percentage that you tell us to that survivor. And that survivor could be anybody. It doesn't necessarily have to be a spouse. But the percentage and the amount basically is driven by the date of birth of that survivor. So you want to kind of look at that and see how that survivor benefit impacts your benefit, because we do look at the age in terms of being able to pay that survivor their benefit. Okay. Now, when it comes to the survivor option, this is one option that is eligible for a change. If the survivor you've designated predeceases you, then you have the opportunity of either choosing a new survivor, or you can bump your payout option up to the basic benefit or the higher benefit payout. And we can reallocate that for you We just, of course, need notification that the survivor that that you had designated is no longer with us. You do also have the survivor also has an option of notifying us and saying they do not wish to receive the benefit. At that point, you can either choose another survivor, or you can just go with a basic benefit at that point. Okay. So you have some options with this one payout option that you don't have with a lot of the other options as well. Now, the advanced pension option is a different, little different setup for you. This is the one payout option that we coordinate with Social Security. Okay. And basically, what the coordination comes into play where all we need from Social Security is a statement, and that statement has to be within 12 months of your retirement. You have to also designate on that statement also has to designate that you will not receive any future earnings or any additional earnings. And that's typically pretty straightforward on their website in order to get this statement. And it also will tell us at what age, anywhere between age 62 and your normal retirement age, that you're going to start to take your Social Security. Okay. So what the advanced pension option does is it advances you an amount towards your Social Security benefit, and that will give you a level payment up until you start to take Social Security. It's a little different, but here's how it kind of works, just to give you a good example. Let's just say your pension is $1,000. Okay. Your Social Security benefit, based on the statement, says you're going to get $2,000 from them. What this will do is we would advance you that $2,000 from Social Security, and let's just say you decided you wanted to take that benefit from, take your Social Security at age 64. At age 64, your pension will drop back down and your Social Security would kick in. The idea here is to just try to get you a level payment throughout up until you decide to take your Social Security payout. All right. Now, it does impact your benefit. It's not a bonus. So you want to take a look at it and see how it impacts your benefit so that you can make a good judgment call as to how you want to structure it. But for many people who take advantage of this payout option is because they retire early. And of course, let's face it, most of us are trying to bridge that gap between normal healthcare costs and Medicare healthcare costs. So this is a way of kind of bridging that gap and giving you kind of a level payout option. But this is one you want to probably make an appointment with us to kind of talk through, or we do have a webinar that kind of goes through all your payout options, and this is one that takes a little more detail. And this is just kind of showing you how that basic pension works based on your reduced age. And this is the assumption of no future earnings and things of that nature that has to be part of that report that comes from Social Security. The last payout option that I want to talk to you about is this coordinates with the basic benefit or the survivor option. And it's called the partial lump sum option payment. I think you guys had something that was pretty similar before. But it is an advancement or a lump sum payout of 1, 2, or 3 years of your pension in a lump sum. Okay. And basically, those are your options in taking this payout option. So the way it kind of works is that you have to reach what we had talked about earlier as your eligibility for an unreduced retirement benefit. Okay. And then that was that, age 50 with 25 years of service. If you reach that and you work 1, 2, or 3 years beyond that unreduced, you can either choose to take a 1 year, 2 year, or 3 year plop and coordinate that with either survivor option or a basic benefit. And here's how that kind of works. Okay, you have 1 year. Okay, we'll give you a full lump sum as long as you've reached that unreduced retirement level. You can do it for 2 years. Take double that. Okay, double that amount. It is the annualized amount of your benefit. If your benefit is $2,000 a month, annualized, that's $24,000. If you do the 1 year, we would pay you the $24,000 as a 1 year partial lump sum option payment. Now, if we pay it directly to you, of course, it's a taxable amount. 20% is withheld for federal and 4% is withheld for state. You do have the option of either transferring or rolling that over into another qualified plan like an IRA or a supplemental retirement account, and 100% of it will be rolled over into that account to give you the benefit of maybe having a lump sum amount there as an emergency pool of cash for you to utilize. So remember, the key to this particular payout option is you have to reach your unreduced retirement age and service in order to do that and work 1, 2, or 3 years beyond that. Okay. This is just a kind of an FY tools that you can use. If you register with my VRS, which is that first sheet that you see there, that's when you log in, it's basically going to tell you what plan you're in, when you started your membership, the current service that you have, date of birth, of course, and then it gives you an unreduced and a reduced amount based on what we have accumulated in your retirement account. Okay. And it also gives you those future dates and things of that nature. So a lot of information is there once you log in that's going to give you a sufficient amount of information to kind of let you know where you stand currently. And you can check it from time to time just to review. And please make sure you log into it and claim that account as soon as you transition over into VRS. There's also a tool in there that allows you to kind of go in and we just talked about benefit payout options. There's a tool there that allows you to put in a date of retirement, a projected date, and it will calculate your benefit for you, okay, based on your average final compensation, and it will do all the formula calculations for you and give you a gross benefit based on that date. So you can use that. It's called create an estimate. It's called an estimator, a benefit estimator, and that will give you that amount. It also will tell you, if you are eligible for that hazardous duty supplement as well. Okay, and that's always in addition to what you have. Also, there is a financial planning tool, and under that page where it says financial planning, you can pull together all the different IRAs and all the different investments that you may have. And it kind of gives you a snapshot that you're able to say, am I tracking where I want to be? What's my goal? How near am I to my goal? And allow you to make some adjustments to your benefit if you decide to do that, just so you can reach those goals that you determined for yourself. Now, the other benefit too, as well, is we'd like to just kind of encourage you to take advantage of, we call it a My Financial Wellness tool. Under My Financial Wellness, it covers a lot of different topics. It's not just about VRS, but if you want to make any major purchases or maybe do some financial planning, learn a little bit more about insurance, taxes, estate planning, things of that nature, behavioral finance tool, which is a great tool that's part of it, just to kind of tell you exactly what type of spender and saver you are. All that's housed in this financial wellness tool. It is great for planning for insurance. Planning, it talks about bankruptcy, talks about budgeting, car purchasing, all types of different types of finances come under play here. So you have an opportunity to utilize that, take a look at it, use the tool. it's very very useful in terms of pulling together the information that you need. Um, now that we've kind of looked at some of the retirement benefits, there's some additional benefits that you should kind of be aware of, and those benefits can also help to enhance where you are and what your current program is, and that means that you might have an opportunity to purchase some additional service, okay, as part of the VRS program. Some may have worked for a previous VRS participating employer, and that service that you had with those folks, that service can be added to your record to either help qualify you for the hazardous duty supplement if it was a hazardous duty position, or for some additional, maybe retire a little earlier because you bought that service. The way that that falls into play is of course, it counts toward your service. Some of the different types of supplemental uh, service eligibility to purchase. The first one you see there is kind of refunded service. Some of you may have been with VRS and then left VRS and took a refund. If you do that, if you take that refund, then you have the opportunity to buy that time back or buy that amount back. And that's what we call refunded service. That refunded service just means that you're going to return the amount that you received. And then there's, of course, interest that's added to that service that will kind of help add that back into your record. And like I said, it may help you to retire a little early or qualify for some additional benefits. Some of the other things that you see listed there, if you were on educational leave, birth, or adoption, even if you do transition over, and this may not fall under, your particular situation, if this happens while you're participating with VRS, you can always use this as an opportunity to buy some of that time and put it back into your record. You see military leave is one of those options. Non-covered service is one of those options, which we consider to be maybe you've worked part-time for a state agency that would participate with VRS. Here's an opportunity to add that into your record and maybe retire early because now you have the service time listed there. Okay. Some of the other things that don't count towards the supplemental eligibility, of course, which is, buying that additional service. Some of the federal service and active duty services as well. That doesn't count towards your supplement, but it does count towards your time in service. So public service, federal service, active duty military may not count toward that hazardous duty component, but it does count toward the service that you need to maybe retire earlier. Now, we also like to talk about, an opportunity that you guys have to add to an extra additional supplemental retirement program. You do have options to do that in addition to what you currently are doing under the pension. The pension is going to pay you, or the VRS plan 1 and 2 is going to pay you a defined benefit. That benefit is guaranteed to you. Okay. So some folks may want to make some additional contributions to an additional component. You can do that as well under some of the defined contribution plans as a separate bucket of money that could come to you when you retire. In most of those plans, you don't have to take funds out of those plans until you reach age 73. At that point, you have to take a required minimum distribution. So you could retire and let those funds sit there until you decide to take them as an additional amount or additional bucket of money. Okay. We do offer like a health insurance credit, of course, and this typically after you reach certain level or certain after 5 years, 15 years of service, then it does start to accumulate. And then it's based on the number of years of service that you have. And that can be something that will be paid out to you based on, like I said, the years of service that you have. And it's paid monthly. It's not taxable. And it is part of the enhanced benefits for hazardous duty folks as well. We also just like to talk about long-term care. We actually talk about long-term care insurance basically as an option for you. It's optional, but we mention it only because of the fact that based on your retirement, um, it can be something that would deplete your retirement savings. So if it's an opportunity to purchase that, an opportunity to add that into your portfolio, you may want to consider that just as a way of trying to um, cover yourself or cover your savings. Because, of course, let's face it, any long-term care facilities can quickly drain any assets that you've accumulated over time. So that may be something to look into. We utilize Genworth Life Insurance Company as an option for that. Now, you also are offered a basic life insurance policy, and that's paid by your employer. That basic life insurance policy is usually rounded as 2 times your salary and it's rounded up to the highest dollar amount. It is a no-cost retirement program. It does cover natural or an accelerated death benefit, and that continues on through into retirement. But it does reduce in retirement. It does after 1 full year. It starts to reduce 25%. Okay. So I usually like to share with folks an example. Let's just say you retired July 1. You had $200,000 as your coverage, 2 times your salary. That 200,000 stays there for 1 full year, okay, till July of the following year, and it reduces 25% the following January, okay. It does reduce each January 25% until it's 25% of what it was when you left or when you retired. Okay. So that's why I always share with folks it's easier to just basically take 25% of it. And that's where it will be for the rest of your life. It does stay there, it is payable, and it doesn't go away. So once you reach retirement, you've reached that retirement eligibility level, then you do have that basic life insurance as a benefit for your beneficiary. So you want to designate someone as well for the, as I said earlier, that defined benefit program, and also for your life insurance coverage that you have as well. You do have the option of buying additional life insurance if you want. We call it optional life insurance. Securian Financial is our life insurance carrier. If you have it currently, or if you transition over and you have it, you can continue it into retirement. You just have to convert it within 31 days of leaving service. Okay. You can continue a portion of it. You can transition some of it over into permanent insurance if you choose to, or you can keep the group insurance. The group insurance stays at a group pricing level with age bands as it currently is, and it does reduce in retirement as well. It's a term policy that reduces at 65, 70, 75, and it completely goes away at age 80. But it does provide an additional level of coverage, and you don't have to go through any medical underwriting to transition over into it if you do it within 31 days of leaving service with the Virginia retirement system. Now, a couple of other things to consider real quickly, and I'll just touch on those just slightly as well. If something happens and you basically are in have to retire on disability retirement, take a disability retirement, the hazardous duty supplement doesn't come into play. For those of you that are in Plan 1, VRS Plan 1, your multiplier is at 1.7 versus that 1.85. Plan 2, of course, is 1.65 versus the 1.85. But you want to look and see if you can take a service retirement. You are eligible at this point if you have the years in service to do a service retirement, or you can look and take a disability retirement as well. And then we will calculate both of those for you so that you can make a choice as to which one suits you or which one works best for you. Okay. Now, let's just talk about, what happens in what we consider to be something or death in service. Okay. And in a situation where there's death in service, if if it's not work related, of course, the non-work related death, then of course this is where your beneficiaries will receive, and you're vested. Okay, that's you've got that 5 years. This is where that your beneficiaries will receive a lump sum payment or a monthly benefit. Okay, so they've got a choice here. They can take what's the lump sum amount that's in your member contribution account, or they can do a lifetime monthly benefit if you're vested. Okay. If you're not vested, of course, they will get a lump sum amount that's payable to them based on what's in your member contribution account. So that just kind of means that you haven't reached that 5 years, but you do have funds accumulated in your member contribution account. Non-vested members or beneficiaries will receive that lump sum amount. Okay. Now, if it's work related, something happens to you on the job, work related situation, then your beneficiaries receive a refund. Okay. What's in your member contribution account. And then they also receive a monthly benefit. Okay. They receive the life insurance. In the other situation where you had non-vested, they also receive life insurance as well. And then there may be some additional benefits under the Line of Duty Act. That's the LODA. So you may want to take a look at that as well. It's a separate website, but it does have some additional benefits that can provide for your beneficiaries, educational assistance, some of the other options that are available in that program. So you want to make yourself familiar with those Line of Duty Act benefits as well. Now, this is, we've heard me talk a lot about a beneficiary. You want to make sure that your beneficiaries are up to date. My VRS is the way to make those changes. Once you log into My VRS, there's a drop-down box at the top that says life insurance, and it says beneficiary change. You want to go in and make sure you want to update that, or want to make sure initially, I guess when you transition over, of course, that you designate a beneficiary for that group life insurance, and also for your defined benefit program. Okay, remember earlier we talked about the defined benefit program having contributions that may not be paid completely out. If there's anything left in that account while you're receiving your benefit, then that's got to go to your beneficiaries or who you designate. Some people choose order of precedence. Okay, the order of precedence in the state of Virginia, of course, means that you're going to leave it to a spouse, and if the spouse is not living, then it's going to go to the children. Not the children, it's going to go to the parents at that point. You want to designate a primary and contingent, if possible, for both the basic optional group life and for your defined benefit program. So that way everything's covered and there's no questions asked where the funds should go. Now, for those of you that choose to return to work, you can come back full time if you choose to. If you come back full time, of course, you still have to do a 31-day break in service. Okay, if you're coming back to the same employer, okay, you have to take a little bit of a break from your position. If you come back full time, of course, then what happens is we just start the clock ticking again. Your time is reported. If you've retired already, then and you come back, then you just pretty much come back into that same plan that you left, and we'll just reallocate, or recalculate your benefit based on the additional time that you had. So that would help you in terms of that. If you decide to come back to work after you've taken that little bit of a break, it's okay. Come back to the same agency or go to another VRS participating employer. You can do that, or go private industry. if you choose to. Okay. Now, you can also return to work part-time. Okay. If you come to work, you take that 30-day break in service. That only means if you only have to do that if you're coming back to the same employer, you take that break in service. If you go to a different employer, you don't need to do that break in service. If you went to another subdivision, different Chesterfield County or some other county and did the same job, you can do that part-time without that 31-day break in service and still receive your pension. Okay. So as long as they're not reporting you as a full-time or, you're not restarting all, in a full-time position, then the part-time position, you can work that position, receive your pension and continue on. Okay. So that's the eligibility criteria for returning to work part-time. You also want to try and contact us. This is just a screen that it provides you with that information. Of course, that 800 number, the 888 number, of course, is how you reach our counselors. If you have a question, they're there from 8:30 to 4 every day, Monday through Friday. We do have counseling appointment eligibility. Currently, right now, they're doing in-person Tuesdays and Wednesdays from 8 to 4:30. 8:30 to 4, I'm sorry. You can also email us at VRS if you have additional questions and you want a correspondence letter or something back to you answering your questions, you can do that. All our information is pretty much housed at that varetire.org website. That's going to be everything that you need to learn or know about the VRS system. And it also has some videos and things of that nature and webinars that you can listen to, especially if you need a little bit more information than what I've given you today. There is that opportunity to listen in on some of those webinars as well. This is just a way that you kind of go and set an in-person appointment with us. And basically, this is considered to be the central region, which is what you'll choose as your option. Or if you're in Northern Virginia, you can do that. But these are virtual appointments that we can set up on the computer at your leisure or at the time you designate and give us your information, fill out your general information, your email, contact information, and it will send you a confirmation of your time, date, and basically who you will be talking to. And we can do it at your leisure at home on your screen. And we'll be sharing our screen with you, similar as we're doing here with this information, so to help you through that. But that pretty much kind of wraps up what I had to share with you, and I'll kind of turn it back over to Ms. Meyer to answer any questions that you might have.
All right, so we're going to open the floor for a Q&A and a few ground rules. So if you could just, if you have questions, raise your hand, use the raised hand feature. And our virtual facilitation will call on you, allow you to unmute your mic and then let you know that you can ask your question. So we'll go ahead with that. If you do have a question and you're having technical difficulties, the chat is there, but we prefer you to raise your hand and ask verbally if you can. So we'll go ahead and open the floor for questions.
Mr. Pulliam, you can ask your question now if you can unmute your mic.
All right, thank you very much. I'm currently in the drop plan. I've been 3 years. And my question is, with the city, with this, am I eligible to exit our drop, take those funds, and then sign up for VRS and continue employment?
Good question. So the drop program participants are not eligible to transition to VRS. Drop participants are considered administratively retired, And because of that, because you're already retired, there's not that eligibility for transitioning to VRS. Now that's not the case if you separate employment for the break-in service period of 1 month. But I believe that if you're speaking about your current employment with the city, but also participation in the drop program, that is not eligible.
Thank you.
And I will mention another word about drop. So for those who are not yet in drop, but we've had the question come up before that I want to participate in drop eventually. Would that be possible if I move to VRS? So VRS does not have a drop program, but we did talk about the payout options. So they have the PLOP program and other benefit payout options. But drop is specific to RRS. If you choose to remain in RRS, you will still have the drop program available to you if you are hoping to participate and not in it yet. So drop is not going away. So dispelling any myths around that, it will remain there for those who choose to stay in RRS. But if you transition to VRS, not next year, you wouldn't be able to go back to RS and participate in drop. Any other questions? All right, well, if we don't have any further questions, I think, Jessica, do you have the slide for the contact information? We have that in the chat. We will put some contact information available for you in the chat, and Jessica just did that. So if you do have any further questions, you can always email our VRS transition questions at rva.gov email. We also encourage you to reach out to RRS and VRS with your specific scenario and questions about that. We also have a website, rva.gov/retirement-transition, where you can find information about future information sessions. And that's where we will eventually have the election form that you'll need to complete to make your choice. So stay tuned, but we will continue to update that website with all of our information. We do plan to roll out our vendor who will coach employees one-on-one on retirement planning. And that's another avenue that you could take in the coming weeks to learn more about your specific situation and make your decision. So we're coming out with these resources for you. Stay tuned and let us know if you have any further questions.
Yeah.
All right. Thank you for joining this session today.
All right. Thank you so much. All right.
Thank you, VRS.
All right. Thank you, guys.
Thank you.